Good morning, everyone. Welcome to our live daily market outlook prepared by Windsor Brokers. Today is Wednesday, 19th of September, 2012. No significant changes in the market with the top release during the Asian session as the heavy rounds of sell-off in yen were dominating the Asian session. With the Bank of Japan. Actually, this was the top release. The Bank of Japan easing policy as Japan's recovery prospects fade. They unchanged the rate, but the Bank of Japan eased the monetary policy by boosting its asset purchase program as prospects of near-term recovery in the world's third largest economy faded due to weakening exports and the fallout from territorial dispute with China that is active these days. The decision basically came hard on the heels of a major quantitative easing announced by the U.S. Federal Reserve last week, and the immediate reaction, the yen slipped to a one-month low, while cash bonds rose and the Tokyo Nikkei stock average hit a four-month high on the decision to offer the bigger than expected stimulus in a move that came a month earlier than many market players had expected, and basically this was the factor of surprise. The Bank of Japan increased its asset buying and loan program. Currently its key monetary easing tool by 10 trillion yen to 80 trillion yen now, with the increase earmarked for purchases of government bonds and treasury discount bills. From the markets, euro holds below 131 level, despite finding some ground above 130.00, still lacking momentum for any stronger, more significant upside action. That could be a good signal for some further easing of its recent high, just under 132 level, while sterling holds still stable as this morning's action actually holds just under 162.72 previous high, and keeping upside the target at 163 in focus. As said, the dollar yen was a star performer in the past couple of days. Rally from 77.12 base breached our important 79 zone level. Currently we are seeing some easing as basically the pair hits the daily Ichimoku cloud top that was not clear. Then just ahead of this we have another strong obstacle at 79.30, the 200 days moving average. Currently it's easing on a brief profit taking, I would say. At the dollar Swiss is still in the rather sideways mode of 92.37 low. Slightly higher high was posted yesterday at 92.95, but 93.00 stays still intact and still keeps the downside more in focus, as larger picture of course is still very bearish, and no stronger prospects for any more significant upside action, with the near-term neutral tone and the larger pictures oversold, larger picture indicators in oversold territory still not generating any stronger recovery signal. From the commodities, the crude oil found some ground and bounced briefly higher of yesterday's fresh low at 95.09 after Bank of Japan's release, but still a negative sentiment following last Monday's sharp sell-off for over $4 losses. Still keep the downside more vulnerable, with the gold again finding ground and posting a fresh high this morning at 17.79. More of this, of course, we will see in our technical part. We're going to take a look now in today's calendar to see the events that are due. As said, the Asian indicators, starting from Australian leading index for July, that came at 0.4%, slightly below the 0.5% of June's release, and of course the Japanese Bank of Japan's release unchanged the rate with the easing the monetary policy. Japanese leading index for July came at 93, above the June's 91.8, giving some positive signals. Bank of England's MPC meeting minutes from the last meeting are due at 11:30, and no changes from the previous meeting are expected on today's release. And from Europe will be only the only one left is the Swiss zoo economic expectations. The forecast is actually we don't have the forecast. Minus 33.3 is the release of the July's release. From Americas, 12:30 is the U.S. Housing starts in for August. The housing housing start for August is expected to increase to 0.78 million units compared to 750,000 units in the month of July, slight improve, with the building permits for August expected to decrease. August release at 790,000 compared to 810,000 in the month of July. With the existing home sales, again, August release forecasted significantly higher, 4.59 million units is seen sold in August compared to 4.47 million units in month of July. This is at 1400 GMT, and 1430 we have the U.S. weekly crude oil inventories. The forecast is not written, but it's 200,000 barrels built compared to 2 million barrels built in the past week release. And in late evening, 22:45 GMT, New Zealand's second quarter GDP is expected to drop 2.4% compared to 1.1% release of the first quarters, showing a slowdown in the New Zealand's economy. And the last one that is basically already in the next day, Japanese trade balance at 23:50 GMT for August, slightly wider gap to 0.37 trillion yen is seen compared to 0.33 trillion yen in the month of July. And that's all from the economic indicators that are due to be released today. We will move now to our charts and see the technical points for the major currencies and commodities, with the euro being number one. As said, double failure at on approach to 132.00 barrier with 131.67 and 131.72 has triggered the corrective easing so far to 130.28 at the channel support, where the temporary footstep was found, but not much seen from the corrective action, as gains were capped at 130.83 on approach to 130, basically the lower boundary of the 130.80, 131.00 resistance band. And as long as these levels stay intact, more focus will be seen towards the downside. The hourly indicators are still in the negative territory, and lack of momentum to surpass the 131.00 still keeps the downside vulnerable for possible further corrective action. For our we're going to take a look also on the Fibonacci levels on the hourly chart. I set 130.28 marks approximately halfway between 38 and the 50% retracement, with the next level seen on the break 129.74, which is a 61.8% Fibonacci retracement of the latest uplift from 128.54. I do apologize, there was a slight 129.75 from 128.54 to 131.70, as seen on a break lower. As at the beginning of European session, the pair starts ticking lower. More focus still, I would say, seen towards the downside, as near-term studies are still weak. On the larger picture, the indicators are in the down move as they emerged of the overbought territory, keeping the more pressure towards the downside, and the break below 130.28, which is the yesterday's low, and the more significant 130.00 psychological support would open way towards another very significant level at 129 area, where we have the 38.2% Fibonacci retracement of 125 to 131.70 up leg, reinforced by 55 days exponential moving average. Basically any stronger dips should ideally be contained at this level in order to keep the larger picture bulls in play. Larger picture now, we are in the daily chart. The studies are quite extended at this point, as the linear regression channel has been briefly, channel top has been briefly breached, and this is basically good reversal signal, with reversal already underway, and the possibilities of further dipping, further dips are not ruled out, despite the studies are still being overextended, but still pointing higher, keeping more focus on the larger picture, keeping the more focus towards the upside, with the clearance of 130, 170, and 132 required to confirm. And our next target is 132.82, peak of 1st of May 2012. On the downside, the risk would be seen on loss of 129.00. That will allow a further extension lower for possible test of 200 days moving average at 128.27. And cable asset keeps steady, following posting the top at 162.72 2 days ago, with the shallow consolidation being contained by 55 days exponential moving average at approximately 162.20, keeping the upside firmly in focus as the price ticked in the early hours of European session at 162.70, so just 2 ticks below this latest high, keeping the upside in focus as hourly studies are emerging out of the above their midlines. More focus is still seen towards the upside, but quite toppish situation on the larger picture on 4-hour chart, as the indicators are quite extended and entering moving around the overbought territory. There is still a risk of some corrective action seen in the near term. Failure to clear 162.70 and 163.00 could be spark for a further more significant corrective movements, as also the daily structure shows quite extended conditions and deeply in the overbought territory, yet no any signal generated for reversal. Our main target remains at 163.00, the 30th of April swing top, and possibility and the near-term focus is still at this level, while the action remains supported with immediate support at 162.20, 162.00 immediate supports, loss of which would be signal for some more significant corrective easing, as 38.2% Fibonacci retracement of the up leg from 160.74 to 162.72, pardon, lies at 161.96, and basically I would say we see the trigger for stronger correction on break below 162, with the 161.50 Fibonacci 61.8% seen next, ahead of 161.20, which is 55 days moving average that is underpinning the action, and 161.00. As said, the dollar yen has registered great recovery of 77.12 low posted the last Thursday, with the action higher breaking above important 79 level, with 79.21 seen so far. This is the high of this morning, end of Asian session, with some profit taking corrective easing seen down to 78.93. Still 79.00 offers initial support ahead of 78.90 90 previous highs. So we have the immediate support at 79, 78, and 90 area, along with the 78, 66, which is the trend line support, and the higher platform at 78.50, and ideally any dips should be contained in order to keep this immediate structure in play. Also significant is attempt to clear the daily Chimoku cloud top, which is at 79.25 currently, and of course we have the 200 days moving average at 79.30, quite a tough resistance area ahead of the pair, but still positive tone seen on the near term charts, sees the potential for further extension higher, although some overbought conditions on the 4 and 1 hour might trigger some corrective easing. As said, the immediate support is at 79 and 78.90 zone that has been briefly dented on the morning's sell-off, while a break below 78.50 could be risky for the near-term action, as this will also trigger a test of 38.2% Fibonacci retracement at 78.41 and delay immediate bulls. Clearance of 79.25, 79.30 is required to open the next upside target at 79.65. This is the high of 20th of August 2012, and basically break above 200 days moving average is required to confirm the near-term top, near-term bottom, pardon, at 77.12, and avert immediate downside risk in favor of some stronger corrective action, with another very significant resistance seen at 80.00. This is the high of, also the high of 5th of July 2012. And dollar Swiss, as we said, quite a neutral tone seen in the near term, following a bounce, consolidative action of 92.37 low of last Friday, with the upside action still being capped under 93.00 as our reference resistance, showing not much potential for the further corrective action on the hourly, but overextended the 4-hour chart studies and already indicators pointing higher and emerging out of overbought territory do not rule out, might be signaling some correction. So far, the descending 20 days exponential moving average keeps the upside limited, with the regain of 93.00 and another significant barrier at 93.40 required to bring some more life into the current quite dynamic movements, with the 93.67, 38.2% retracement of the latest down leg from 95.36 to 92.37, reinforced by descending 55 days moving average to spark some stronger action, while break above 94.00, lower top of 94.16, pardon, 94.00 is round figure resistance, and 94.07, 50% retracement, as well as 94.16, lower top of 13th of September, required to confirm near-term basing attempt and allow for a stronger recovery. On the other side, still quite bearish structure on the larger picture keeps the downside focus despite quite extended conditions, with the 92.00 and 91.80 being our near-term targets, as the pair progresses lower following a break below important 94.00 level that marks round figure support close to previous lows, as well as 200 days moving average, and of course a break below 93.20, where was the longer term trend line support, keeps the downside more vulnerable at this point. Set 92.00, 91.80 are the near-term targets, with the, as long as the corrective action remains under 93.40, 60 resistance zone, and only break above here, above these levels, basically would provide a temporary relief for the pair's price action. And as said, the crude oil, we're still in October, it's expiring today, so we are going to end the today's session with October. And negative tone continues to dominate on the short-term outlook following the sharp sell-off from 2 days ago when the price dipped down to 94.67, basically just just above our strongest support and base at 94 zone, with the not much action seen on the recovery bounce from 94.67, gains being capped at 97.20. That marks approximately, this way, approximately 50% retracement of the recent fall and subsequent further easing, still keeping the downside in focus. As long as 97.20 and more significant 98.00 stays intact, we'll be seeing a downside more vulnerable at this point, and a possible extension below a significant 94.00 basis required to trigger a stronger reversal. The price action remains below 200 days moving average, currently at 96.51 as yesterday's close. Below this resistance sees the possibility of further extension lower. A break above, as said, 97.20, 98.00 is required to avert immediate downside risk and probably refocus upside barriers and targets at 100 and 140. That was the peak of last Friday. And finally, the yellow metal that has again regained the ground following a corrective action from 1777 that was contained at approximately 1752, showing approximately 38.2% retracement of the up leg from 1717 to 1777, with this morning's action breaking above these levels and looking for a test of our next significant target at 1790, where we can see this level. 1790 is the 1798 is the high of 26th of February 2012. Basically, we have a stronger resistance area congestion between 1790 and 1802, that break of which to confirm the higher base at 1520 and the refocus upside levels with the 1920 record high of gold posted in 2011 in September to come in the short to medium term focus. Back to the lower time frames, the hourly studies are positive and supportive currently, and see potential for further stretch higher with clear break above 1779. We've seen only 1777, pardon, we've seen 1779. Required to refocus 1790 as initial barrier, as 4-hour ones are still in descending mode and basically not promising at this point. See the 4-hour indicators still see more focus towards the downside, but overall picture is still quite bullish, as the part of the stronger rally from higher low at 1590 see still more prospect towards the upside, as the near-term focus remains at 1790 and 1802 our next upside targets. That was all from me for today, for Wednesday, 19th of September. Please, if you have any questions, you can submit them now. And also you have an email on the start page where you can submit any of your if you require any more detailed answer, any comments or any feedback, anything that you find interesting or you would like to change or add, or anything, you can submit it through email. Do you have any questions for this session, please? Okay, no questions. It's obviously no questions for today. I would like to thank you all for being with us this morning, and of course we expect you to come again tomorrow. We're at the same time, 7:00 GMT, 10 o'clock local Cyprus time. Wish you a nice day and very successful and profitable trading. Good luck.